Let's turn to the Chinese economy. China's latest Purchasing Managers Index, or PMI, for the manufacturing sector dipped to 49.5 in August, below the 50-point mark that separates expansion from contraction. The figure slightly rose in the non-manufacturing sector. It came in at 53.8 in August. The numbers also showed industrial upgrading on track, with high-tech manufacturing and consumption-related sectors still in rapid growth. China has stepped up specific measures to support economic growth, with plans to deepen capital market reforms and protect the legitimate rights of the investors while sticking to a prudent monetary policy with reasonable, ample liquidity. Now, there are a lot of terminologies over there, so how to understand all of this? For more on China's economy, we are joined in our Beijing studio, Ding Yifan, a senior fellow of the National Strategy Institute from Tsinghua University. Also joining us in Shanghai from China, Jimmy Zhu, the chief strategist of Fullerton Research. Gentlemen, welcome to our program. I want to start our conversation by talking about the pork prices. Well, our viewers around the world might be surprised at why pork prices. Well, it is a very significant element if you look at the state of the Chinese economy. If we take a look at this, pork prices in China had soared to a record level after African swine fever swept throughout the country's pig herd. Prices of pork, which account for more than 60% of China's meat consumption, rose more than 25% in August from July, with hog prices surpassing a 2016 record of 21 RMB per kilogram, according to consultancy firm Shanghai JC Intelligence. So the number is there, but why it matters? Mr. Ding, as an economist, you know better than I do about the pork prices, and what does it say?
Okay. It's because the pork constitutes the main elements of Chinese food. So Chinese people like the pork meat, and pork meat constitutes more than half the Chinese consumption meat. So when the pork prices rises, it affects directly the CPI level. Why the CPI level rises, the central bank should intervene into the market to try to stabilize the prices. So there is a chain reaction among all these.
Beautifully explained.
That's why Chinese government pays a lot of attention to the pork prices. When the pork prices rises, Chinese government try to intervene into market in providing more pork reserve, because China is the only country that have a huge pork reserves. So to some extent, Chinese Ministry of Commerce will try to provide more porks reserved from the state reserve to try to alleviate the pressure of prices on the consuming market.
I see. Mr. Zhu, so China does not only have an exchange reserve, but also a pork reserve, unlike any other economy in the world. But the serious issue is, what does it say about the pressure that consumers in China have to face at this critical juncture as a result of various factors? Mr. Zhu.
Sure. When global central banks are talking about the easing, so including China, because the economy sees some pressure. But the pork prices is a very important element to the China's CPI. Now the CPI is just right below 3%. It's still okay now because everything's below 3%. I think the PBOC still can afford that. But the thing is, if the pork prices keep rising and pushing the CPI prices above 3%, then probably it will restrain the PBOC's easing measures from here.
And even the State Council, Mr. Ding, were having a special session on the pork prices. Of course, it's not just the pork prices they're talking about, but rather how to deal with the pressure and the downward pressure as a result of many factors, both internationally and internally right now.
We just signaled that the CPI, no, not the CPI, but the PMI level is going slowly down. So it's not a good signal for Chinese economy. But as the trade war is going on, so our export despite the growth in export, because China's export is still growing towards other countries of the world, but our export towards the United States market is going down very sharply. So that could affect the Chinese manufacturing sector, but because a lot of Chinese products made in China products were destined to the US market. So as China cannot afford to continue to deliver those kind of manufacturing goods to the US market, and we will try to reduce the exposure of to the US market, and then we have to find other ways to supplement
Of course,
the
Chinese
demand.
exports now to some of the other economies besides the United States has been rising, even though toward the United States has been falling down. China also has been falling to the third largest exporter to the U.S., following Mexico and Canada. Mr. Zhu, going to you now, what's some of the measures proposed by the Chinese State Council in terms of stimulate the economy, in terms of bringing confidence to the consumers? Do you think they will work?
I think at this moment, the problem is from the demand side. It's not really from the supply side. Even you see from beginning of the third quarter, the global central bank starting cutting the interest rate and they release more credit and the liquidity to the financial system. But the thing is, the companies, they just don't have even the interest rate is lower, but the confidence is not there. So they rather wait and hold to see, what kind of situations like trade war, like Brexit, like slowdown in Eurozone might carry out. Until these things get clear, then their business is to be clear. So on the China side, I see the two things PBOC is not going to do. First is that it will continue to exercise the target-based easing, to lend the money to the right place. And number two is to solve the demand side. If the external demand is so slow, China is expected to launch some physical stimulus like infrastructure building, special bond issuance, because this is the measures actually can directly boost the demand from the local side.
May I let you to clarify exactly what you mean when you say lend the money to the right places? What are the right places you are referring to, Mr. Zhu?
Right places means the small medium companies, the SME. I think the target has been never changed in the past 12 months, and this is also reflect in the past 12 months in some PMI data. As what we see is the divergence between the official PMI and the Caixin PMI. Official PMI is the data is more focused on the big company, the big SOE. And the Caixin PMI is more focused on the small SME companies or the smaller size companies. So what we see the August data, the small companies actually their PMI is above 50, but the big company data is still below 50. I think that kind of stimulus effect is what government want to achieve. If the government just cutting the interest rate or cutting the broad-based R, then the money probably would just go to the financial market and the stocks market.
I see. There's one thing that we really need to ask, which is China, as vast as the country is, as a big population as it has, will they be able to be the most important factor, the size of the market and also the size of the economy? Will that be the determining factor that would get China through the relatively challenging time and be able to restructure its economy? Well, the world growth rate probably is also coming down as a result of trade conflicts among economies. Mr. Zhu, go to you first.
Yeah, I think that China is still possible because even what we see the trade tension between the U.S. and China are escalating, but we see still there's a lot of foreign companies, including the U.S. company, coming to China. The reason is that they are looking at the consumption market. Even the industrial demand slowing down, but what we see is the consumption demand, especially in the second, third tier at this moment. And number two is I think that China still continue to exercise its financial reform because the financial reform is like exchange reform, rate reform. It's a very important stabilizer to stabilize the economy itself. So these two areas, one thing to boost the consumption, another thing to boost the liberalization in the financial market, that is really help the Chinese economy in the long run.
Right. Mr. Ding, does size matter?
Yes,
will
of
size
course.
be the ultimate factor that matters?
To some extent, the Chinese economy size is a trump card for Chinese economy to cross over this difficult period of time. I think that if Chinese have this size, so the consumption that will determine the orientation of Chinese economic development will be very, very important. Since last year, since 2018, China has overtaken the United States to become the world's biggest consuming market. So to some extent, we can rely on Chinese consumption to support, to offset the negative impact of the reduction of Chinese export towards other markets.
Well, yesterday we had a report and discussion about the Costco's grand opening in
Yes,
China,
yes.
which is quite a drama, and particularly in Shanghai, Mr. Zhu knows this, I'm sure, very well about the drama on the first day. People rush to the scene and try to buy as much as possible. Of course, later the story have changed, but but Mr. Ding, will this be typical story, or rather just one of those dramas at a time in which, the purchasing desire of the public will be put with a question mark?
Oh, the drama or farce of these kind of Costco's branch showed that Chinese consumers have a huge capacity of purchasing power. So for China, for Chinese government, the purpose is to mobilize, to stimulate the enthusiasm for purchasing. And then Chinese State Council's office just issues a notice announcing a series of measures that the Chinese government is ready to take to try to push forward Chinese consumption in facilitating the different channel of Chinese sale process.
I see. And Mr. Zhu, of course, earlier was also mentioning about this. Mr. Zhu, your take, briefly, we got 1 minute only.
Sorry, I can't hear you.
Your take. We have some problems over there, but I guess it has already been quite well explained about the realities of the Chinese economy and also the policies that has been put out there. We're running out of time. That's why we cannot wait for further discussion from Mr. Zhu anymore. So for now, I want to thank both of you for being with us, Ding Yifan and Jimmy Zhu, joining us from Beijing and Shanghai. Thank you so much.